Alright guys, welcome to this lesson on Trendlines, and this is the part 1 series. So basically, what is a trend? Now it is a situation where price is traveling in one direction for a sustained period of time. So for example, if you zoom out in your chart, for example a H1 chart, you can see price going on an uptrend for a long time. You see a lot of green candles. It doesn't last for one day, it doesn't last for 2 days, few minutes, few seconds. It lasts for days and weeks and sometimes months. And how do you know it is a bullish trend? You see higher highs as well as higher lows. Okay, how about for bearish trend? You see lower highs and then you see lower lows. Okay, now if you study physics, there's this Newton's first law, okay, and it says that an object in motion tends to stay in motion unless acted upon by an unbalanced force. This means that when a trend is established, higher chance it will go in the same direction. So if you trade against the trend, you are literally putting yourself in a position where you'll be prone to losses. If you're a beginner trader, it's very important for you to trade along with the trend. But if you're an experienced trader, I guess it's fine to trade against the trend, because yes, there are some people who are really good at picking tops and bottoms, and only when they are more experienced then they can do that. And it's very important for you to learn how to spot a trend, but also learn how to spot when is the end of the trend so that you can get out if you're in the trade. So why is it so important for you to spot the trend? First thing first, it increases the probability of your trade and also reduce losses. Second thing is, a strong major trend can help you reap good profits. And when you learn to spot trend, you'll be able to also learn when is the trend going to reverse. Okay, and last thing, it makes more sense than trading ranging markets. I would say more profitable for most traders as compared to trading in a ranging market. Again, if you trade in a ranging market, you need to be more experienced for you to be able to trade a range market properly. A lot of traders find that they'll lose money if they trade in a ranging or sideways market, because in a sideways market, you find that there are a lot of false breakouts. So some of the ways you can trade a trading market, first thing first, which is one of my favorites, trading a market pullback. Okay. Second thing is to trade a breakout. You can trade against the direction of the trend, or you can trade along with the direction of the trend. And of course, with any trend, there are minor pullbacks. And hence, when the price pull back to any moving average like that, and in this case your 100 SMA, okay, then this is where you can enter. So this is what I mean by entering on a pullback. How about for breakouts? For a bearish trend, you would draw support zones. Okay, let's say for example I drew this over here, and when the price break a support zone, a strong support zone, then you can make a sell. But in this course, I'm going to focus more on the price pullback trading, because in the beginner's course, I've already taught you this, how to trade breakouts properly, what indicators to use. So let me just go through some basics of trend lines. Now, what is a trend line? Basically, it's a tool used in technical analysis, and it is a line that connects at least 2 points. You need 2 points, 1, 2, to form a trend line, and you need the third point as a confirmation. And normally, I would prefer that if you enter the third point, because if you enter the second point, it is a little bit too risky because the trend line is not confirmed yet. So I would prefer to enter the third point, or potentially the fourth point. And a trend line can be used as a dynamic support resistance zone. That is where price is going to bounce off. And it is always a work in progress, meaning that you constantly need to adjust it. So one example over here, I drew this trend line based on this point and also this point, and potentially you can enter the third point. Now see that on the third point, there's a little bit of false breakouts downwards. right? How do you know whether it's a false signal? When the price broke the trend line, you can see that a bullish candlestick signal is formed. In fact, there's a doji before that, and it tells you potentially price is going to reverse back upwards, and that this will be a false signal. So a break of a trend line doesn't mean that, oh, a new trend will come. Sometimes it can be a false breakout. Sometimes it can be the start of a new trend. Okay. So some of the functions of trend line. First thing, it helps you determine the direction of the trend. Second thing, it is used to determine retracements and trend reversals. Third thing, it helps you indicate the momentum of the trend. Fourth thing is it can become a potential buy and sell area. As long as the trend line is not broken yet, it is still intact, then it can be a point where you buy. Okay. Now the thing is, how should you draw a trend line properly? When it comes to an uptrend, you draw below. Okay. You draw below the price action. Now a lot of people ask, should I draw the trend line at the wick or at the body? There's no right or wrong because it depends. You just need to draw a trend line where it touches the most amount of points. Example, the first point can be touching body. Then the second point, it can be touching more wicks than bodies. Example, okay? You don't have to be too fixated like, okay, every time when I draw a trend line, it has to cross the body all the time. You need to draw the best fit line. Okay, that's the most important thing. So you can see over here, I drew it based on the wicks rather than the bodies. Okay, like I said, draw the best fit line. And also you can see that price tends to bounce off the support again and again. And in an uptrend, support tends to be stronger than resistance. So that's why I don't draw it at the top over here like that. You can draw it just based on reference, like where to take profit, which can be helpful because let's say if you buy over here, you might want to take profit right here when it tests the trend line. But when it comes to trading an upside breakout, I wouldn't recommend that. Okay, I wouldn't recommend that. When it comes to a downtrend, resistance will be stronger than support, and hence you draw at the top. Okay, draw at the top. And you can see again, price will come out and test the trend line on top. Now the thing about drawing trend lines is that it doesn't have to be perfect. You don't have to draw in such a way that, okay, it must touch every point. No trend line is perfect. And also understand one thing about downtrends is that it tends to go down faster than an uptrend when it is going up. Because when it goes up, it will take the stairs. It will be formed very, very gradually and in a stable manner. But when the bears come in, when fear starts to come in, fear is a very powerful emotion, and hence bear markets, you tend to realize that they tend to drop really fast and in a very volatile manner. Okay, there's a free fall. You see this in the stock market as well. The markets drop faster than it goes up. Okay, because the thing is, when traders see the first sign of weakness, they are going to sell and sell and sell. Okay, but when it comes to building optimism, it's going to take some time. Okay, so in the next lesson, I'm going to teach you more about trend lines, and hence I'll talk to you in the next video. Bye.